Hey traders, welcome back to the channel. In today's video, we are going to talk about one of the most powerful techniques professional traders use, multiple time frame analysis. If you have ever wondered why your trades keep getting stopped out or why your entries and exits don't line up with a market trend, this video is for you. Trading on just one time frame can give you a very limited view of the market. Imagine looking at a chart through a keyhole. You only see a small piece. But when you combine higher and lower time frames, you get the full picture. The higher time frame shows you the bigger trend and key levels of support and resistance. The lower time frame shows you the precise moment to get in or out. Together, they give you both direction and timing. Now let's talk about the most important concepts in trading with multiple timeframes, the top-down approach. Here's how it works step by step. First, start with the higher time frame. This could be the weekly, daily, or 4-hour chart, depending on your style. On this chart, you are not looking to enter trades. You're only identifying the overall market direction. Ask yourself, is the market trending up or trending down or moving sideways? Second, mark your key levels. On the higher time frame, mark out support, resistance, order blocks, supply and demand zones or trend lines. These are the big areas where price is most likely to react. Third, drill down into the middle time frame. This is where you refine your analysis. If you started with the daily, now go to the 4-hour. If you started with the 4-hour, now go to the 1-hour. Fourth, go to the lower time frame for entry. Finally, you move down to your execution chart, maybe the 15-minute, 5-minute, or even 1-minute if you're scalping. Here, you look for your actual entry signals, candlestick patterns, indicator triggers, or breakouts. Example, on daily chart, you see your USD in an uptrend. On the 4-hour chart, price is pulling back into the support zone. On the 15-minute chart, you spot a bullish engulfing candle or a moving average crossover. That's a textbook top-down setup. Trend from the daily, confirmation from the 4-hour, entry trigger from the 15-minute. By stacking these time frames, you filter out a lot of false signals and increase your accuracy. One of the most common questions traders ask is, which time frames should I actually use? The answer depends on your trading style. Scalpers usually focus on the 1-minute and 5-minute charts for entries, but they also check the 15-minute or 1-hour chart for trend direction. Day traders often use the 15-minute and 1-hour charts for entries and exits, while checking the 4-hour chart for overall trend and key levels. Swing traders typically enter on 1-hour or 4-hour charts, but always confirm directions on the daily or even weekly charts. Position traders or investors rely on the weekly and monthly charts for direction and may fine tune entries on the daily chart. This way, every type of trader can apply multiple time frame analysis. It's just a matter of matching the right combination of charts with your style. Multiple time frames are also useful for exits. For instance, you might enter on 15-minute chart, but you don't want to close the trade too early. So you watch the 1-hour or 4-hour chart for signs of trend exhaustion, like bearish divergence or price reaching a resistance zone. This helps you stay in winning trades longer and exit before the reversal hits. Always use at least two time frames, one higher, one lower. Some traders even use three. A good rule of thumb, keep a 1-to-4 ratio. If you trade the 15-minute chart, check the 1-hour for trend If you trade the 1 hour, check the 4 hour. Don't overcomplicate it. Focus on aligning the higher trend with your lower entry signal. So that's how you can use multiple time frames to improve your entries and exits. Next time you open a chart, don't just zoom into one time frame. Step back and see the bigger picture. If you found this helpful, hit the like button, subscribe for more trading strategies, and let me know in comments what time frames do you use for your trading. Thanks for watching, and I will see you in the next videos.